Alright guys, what is going on? Welcome back to another video. In this video, we're going to break down how I made 13,972 from my day trading today. It was a fun freaking day. It was a good day. Was a very good start. And let's break it down entirely how I did it, shall we? Okay, first things first. How much did I risk for the day? You gotta always ask this question. Now, initially, for the first trade that I take, I always risk. Like I have a mindset. Whenever I'm trading, I have this mindset. Okay, so my first trade of the day that I take, I always take with about a $2,000 position size. If that trade is green, the second trade becomes bigger position size. You can go up to 5K, then 10K, 15K, or even more if the position if like the main thing that I want to break down is the first trade of the day. Let's say if the first trade of the day is red, I keep my position size either 2K or I'll drop it down to 1.5K. That basically means if my first trade of the day is green. Now I had a mindset back in the day when I was starting out, man. If my first trade of the day is red, I will be red on entirely on the day. This is the like one thing that I've noticed with my the way that I structure or the way that everything works for me is if my first trade of the day is red, I will be walking away red on the day somehow. I have no idea what's the psychological impact or psychological reasoning behind it, but this is just one of those things that always happen with my trading. So what I did was I started taking my first trade of the day with a small position size. Let's say if that trade is red, the next trade, this is red, this trade, red. Let's say if I'm going red on the day, let's say if I lose 20% here, that's $400. If I lose 20% here, that's $400. If I lose 20% here, that's $300. Now I'm walking away with $1,100 red. Comparatively to the days when I make money, I make way more. This is the only one reason why my winners are so big and the losers are so small, because I know how to start my day and I know what works for me and what doesn't work for me. If you are somebody who, if your first trade is green and you walk away green on the day, somehow mindset wise or psychological wise, you need to set this up in your trading ASAP. Take the first trade of the day with a small position size. Now, for example, you might have $5,000 in your trading account, do the first trade with like $600 position size. Okay, if that's green, go bigger. If that's small, either keep it same or go small. Okay, super, 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 super important. If this is red, first trade is red, you go either small or either same. Okay, if you have, let's say, 3K in your trading account, do first trade 500. If you have 2K in your trading account, do first trade 400. Super important, very, very important. Now let's break it down. Now, I have, bro, some of you might be like, oh, but you have more money in your trading account. No, it's not about the money in your trading account. It's about the management. Now, doesn't matter after a while, especially when you've been trading for a while, your trading account size just automatically grows. But that doesn't mean that you take even 10% of the money that you have in your trading account as a position size. You just take it becomes less about the percentage, but more about how much money you can make. So I start my day with 2K, then I'll increase it 5K, 10K, 15K, but that's different. All right. This is again, you should be looking at it like, oh, one day I'll be there, but only way to be there is if I follow the mindset and the structures that he follows on a bigger account, because the stuff that I do on a bigger account can be copied into a small account, and that's the only way you can actually make money. Period. Okay, let's break it down. The trades that I took, I'll talk you through this. Look at this SPY, man. What an ugly freaking chart. Look at these wicks. Ugh. All right. First trade of the day came on SPY. Now, time frames. I'm sure if you have watched a few videos of mine already, you will already know this. But if you haven't, for people who are watching the video for the first time, it's super important to actually watch different time frames for different times of the day. I watch um, I watch 2 minute chart for first 30 minutes of the market open. That means 9:30 to 10. I watch 2 minute chart. I'll explain the reason why. 5 minute for next 60 minutes of the market open from 10 to 11, and 10 minute chart from 11 o'clock onwards. Now, have you ever done where you're in a trade on a 5 minute chart and you switch the time frame to different time frame just to get a bias? Where you're like, oh, you're looking for a trade towards the upside and the 5 minute looks ugly, so you jump to a 15 minute chart in the middle of nowhere just because you want confirmation bias, just because. Have you ever done this where you're like, oh, I don't know if this is good enough or not, and then you look at other time frames and then you get a little confirmation, and then that makes you feel like, at least it's okay. You see what I'm saying? If you have done that, this is the reason why I came up with this rule that I need to use different time frames for different time of the day. It just makes your life so much more easier. Okay, so when I'm on a 2 minute chart, I do not look at anything else. When I'm on a 5 minute chart, do not look at anything else. When I'm on a 10 minute chart, I do not look at anything else, and that's it. Cool. Let's break it down. Now, I was on a 2 minute chart when I was trading SPY for the day. Now, first things first, basically understanding the concept behind the gap downs. Now, SPY closed at this 594. 594.5 ish is where we closed. It made a huge move towards the downside after hours. It kind of um, got downgraded or whatever crap. I've seen the market go up on a bad news. I've seen the market go down on a good news. News doesn't really matter. The price action matters. Price action started moving towards the downside. What basically happened here is, let's say if somebody shorted 50,000 shares right here, for example, when you short, you sell first. When you sell first, you have, in order to close the position, you have to buy back later. For example, I'll explain what shorting actually means. Shorting means you can make money when the market goes up. One is short, other one is long. Long means you're making money when the market goes up. Shorting means making money when the market goes down. Now, understanding the concept behind shorting and behind shorting is, for example, you see somebody, you have a friend, this is you. You have a friend of yours, he's like, hey, I'm really looking to buy an iPhone. I want an iPhone really, really bad. You're like, oh, do you? Yeah. And he goes, I can pay up to $600 for an iPhone. So you standing there, you're like, okay, $600. You want to buy an iPhone for $600? He's like, yes. Like, okay, no problem. I have one that I can sell you for 600. He's like, really? Yes. He's like, but it's at home. I'll bring it down. I'll bring it down later in the evening. Give me the money now. I'll bring it down. And this guy knows you, trusts you, and he gives you the money. He's like, yeah, $600, done. But you go home, you do not have an iPhone. You lied. So you go to your other friend. You tell your other friend, hey, are you still trying to sell your iPhone? He's like, yeah. He's like, how much are you looking for it? And this guy goes, oh, I've been trying to sell it for a while, man. I'll take it. I'll literally take $400 for it. He's like, because he already has the money. So he's like, okay, here, 400, sell me the iPhone. So this guy sold his shares first, right? He sold the iPhone first. Then he went and bought the iPhone, and now he's gonna give it to him. So how does he make money? He makes 200 in the middle. That's how every shopkeeper fucking own. Like, for example, if I go to a store and they're like, hey, we do not have that in store, but we can order it for you, but you have to put a deposit down. So they sell first and then they buy and then they give it to you and they get to keep the difference. This is how shorting works. Basically means you sell first and when the prices go down, you buy later. Okay. Now, how to actually execute it? Instead of pressing the buy button first, you just press the sell button first. Pretty much that's how actually works. But in order to close the position, you need to buy it later. Like the dude had to buy an iPhone to actually fulfill the order. So when somebody buys, that creates a synthetic because this is synthetic because it's not actual demand. It's just somebody buying because they want to close the position. That can sometimes create a little imbalance in the market, which increases the buying pressure and the prices can push towards the upside. Always pay attention to this. Whenever the market gaps up or gap down, there's always going to be some profit taking and the price is always going to move a little bit against the trend. The trend is down here. So what happened? I was looking for it. I was like, yeah, no problem. Let's see. Prices started moving towards the upside as soon as the market opened. It broke above the pre-market high. One of the most important points that you need to pay attention to are the pre-market highs because that's where the most recent buyers and sellers came into the market was at the pre-market high. Broke above the pre-market high. Sweet. Now I'm watching this. I'm like, okay, clearly this is strong. It's pushing for a reason. People are taking profits. Okay, now what happened? I'm still waiting for entry. I'm not going to enter up until I find an entry. This 590.5 is the hourly level that I had on my charts. I'm like, okay, this is a critical level. Let's see where the prices get rejected at. Prices started forming a beautiful little flag right here. Now, what's this flag? Pay attention to this. This is super important. You need to pay attention to these wicks. You see these wicks? If you think about it, what prices did, it tried to push towards the upside right here, the wick. Then the sellers came in, moved it down right here. Then as soon as the next candle opened, sellers even pushed it down further and then pushed it up. And then on this candle, what happened? They pushed it down. Then the buyers took over. Think about it. It looks like this in the back end. Yeah, here you see the candles, but it looks like this. It made a move up, move down, move up, move down. What does it look like? It looks like to me a flag setting up, beautiful flag setting up towards the upside, right? After a big move, especially the flag is on a level. Clearly, that means buyers are still present. That's why they kept pushing the prices up over and over again. Otherwise, the sellers would have taken over. So that became my entry towards the upside. And I was like, this looks really, really good. As you can see right here, I said SPY above 590.5 for calls at the break of this flag. Super simple setup, but just understanding the psychology behind this. And what happened? Made a big move towards the upside. Look at this. It gave multiple different entries. First entry right here, second entry right here, third entry right here, made a move towards the upside. And now 10 o'clock is when I jumped to 5-minute chart. And I jumped to 5-minute chart. I was watching this and it made a big move towards the upside. We kept taking profits, and that's how you print. All right, this is called psychology. Now you might be like, why do I even make these videos? The reason why I'm making these videos, man, I'm gonna keep it super real. Back when I was starting trading 2018, 2019, there was not enough content on internet which was explaining the concepts this clearly. So it took me long time. I lost money for 14 months straight. It was super frustrating. And the reason why I make these type of videos now, making concepts super simple, is because I wish these videos were available back in the day. And now I'm trying to make the videos for the younger version of me who was starting out in 2018, 2019. He didn't have this, but I want to give you the best possible reason to actually succeed using this stuff. Again, my free stuff can actually you can start making money. If you want to really level up after you start making money, you're like, man, I make a couple $100 a day every single day. I need some mentorship. I do have KCU as well, which will be linked in the first link in the description box below. But that's the only reason why I make these videos. I want you to start doing well for yourself. Literally it. I wish this information was there back when I started. Honestly, that's it. Super simple. All right, this is the first trade. While I was trading this, at the same time I was also watching SPX. While somewhere in the middle, when I actually started taking position on SPY, I started taking position on SPX as well, roughly here around here. It made a nice move towards the upside. I really got paid. Look at this. I really got paid from this. Now, why did I do SPX? You gotta understand. When I'm in SPY, I need to do a big position size. Like the first trade of the day is 2K. That trade is working. Now I need to increase my position size 5K or 10K. For example, me doing $10,000 position size when the contracts are $150 each, you know how many contracts that I have to pick up? I have to pick up what, 75 contracts? I think 75 contracts to be able to do this. Now 75 contracts, commissions by itself, let's say you get 50 cents per trade per side, you're paying super heavy commissions already. Like for me, if I need to do 10K position size, instead of paying so high commissions on SPY, I'll just look at SPX, because 10 contracts on SPY kind of equals to one contract of SPX in a way. So rather than doing 75 contracts here, I'd rather do 10 contracts on SPX or 20 contracts on SPX and actually have a bigger position size, because I have conviction in the trade and actually be able to catch the trade and actually get paid a little bit bigger. That's the way to trade. I'm watching SPY's chart, but I'm trading SPX at the same time while I'm in SPY. I also had SPY calls, but I also had SPX calls. This is just a way to keep your trade, because it's so much easier to get in 20 contracts than getting in 75 contracts. Because if all of a sudden I have to sell, if the market decided to turn, it takes a minute to get filled in 75 contracts, but it takes a second to get filled in 20 contracts. You see what I'm saying? Especially a minute is a very long time when we're day trading. You get my point? So this was the same trade that I took on SPX as well. It really paid. Then I took a trade. Actually, towards the afternoon, I took another trade on SPY that ended up not working, which, I have to break down again. It was a beautiful trade towards the upside. It made again, similar setup, similar flag type setup around this critical level that I took. I took this trade towards the upside. It ended up just reversing really quick on me, but that's okay. Sometimes trades work, sometimes they don't work, and I jumped out. But because I already had my runners, so I jumped out my entire position roughly here because the structure broke. This is how the structure works. Structure will break the moment previous low fails. Previous low is here because this is how the price is going. That broke. I jumped out because the structure broke, and that was it. And after that, SPY kind of started being choppy because the structure has broken. Look at this. Yeah, you might be like, oh my god, but it still went up, bro. When you like, you being serious right now? These wicks. Now I'm so happy that I actually listened to myself and listened to the market telling me to jump out. Beautiful trade. So I don't have to babysit the trade. You see what I'm saying? Then came, like, these are the three trades that I broke down. Then came a trade on Meta that I took. Similar setup. About 10 o'clock, I was watching the markets. Everything looked good. Prices were above on Meta. Same stuff. Similar mindset. Gap down. Profit taking started happening. Price started moving towards the upside. Broke above the 200 simple moving average on a 5-minute chart. Broke above the pre-market high. Broke above my hourly levels. Everything looking good. I'm still waiting for an entry. The entry only comes after a pullback. I got a pullback. I used the Fibonacci's to kind of make sense if the thing's still looking clean. The Fibonacci said the thing's looking clean. The Fibonacci has to be made from the bottom up. My bad. That's looking clean. So I'm like, okay, you know what? I'm going to go long here with the stop loss literally on the other side of this flag. And my first profit target being the 400 moving average on an hourly chart, and 400 moving average on a 5-minute chart. And the next profit target being 640.8, which is my hourly level. And now you might be like, I'm making these levels out of nowhere. No, I'm not. I actually, hang on, let me show you. Every single day, every single freaking day, I post my levels in my chat. This is the levels that I posted before the market even opened. Look at this. These are the levels that I posted on Meta. If you see right here, I posted 640.7 and 644.8. These are my levels that I'm watching, and you can see right here. So this is where my entry became. I jumped in calls. First profit taken at 400 moving average. Second profit taken at the hourly level. The remainder contracts that I have, the stop loss became break even. For example, let's say if I have 10 contracts, I'm always going to take 50% position at the first level. Then another 50% position will come here. That means out of 10 contracts, I'll sell 5 first. I'm holding 5. I'll sell 3. I'm holding 2. I'll sell 1. I'm holding 1. And that 1 will be taken out if the price keep moving up. The 1 will be taken out the break of the structure. This is how the structure breaks. You see what I'm saying? So then it reversed and it kind of took away my profits. But at the end of the day, all I'm trying to say here is you need a structure. If you're trading options, you need structure. You cannot be like, oh, I just need to be lucky. No, bro, luck eventually will run out. And when luck, any money that you make in the market without being disciplined is eventually going to go back in the market, be it today, be it 6 months from now. And that's why when you get lucky on a trade, you do some dumb shit and you start making, let's say you made $3,000 in a day. I'm sure everybody listening to this have made some sort of big money in a day and then given it all back. That's just because any money that you make without being disciplined is eventually going to go back in the market, be it today, be it 6 months from now. So what's the point? Even like, this hurts when you give it back, because the confidence hurts. It feels like the trauma when we were kids and somebody took our toy away from us. We were like, oh my God. The trauma comes back and you try to, fight, because now you can fight. When you were kids and somebody took your toy away, then you couldn't fight. So the trauma comes in, your brain goes in fight or flight, and you try to fight the feeling, and then you blow up your account just because you feel like you can fight. But no, the market is always going to be, you got to understand, market is Mike Tyson in its prime, always. You do one mistake, you're going to get knocked out. You get my point? That's all I'm trying to say. Now, these were the few trades that I took. It was a beautiful trade. After the first trade, second position size goes higher, third goes higher, fourth goes higher. This is how I kind of roll, and a beautiful risk management. Now, if you do enjoy these videos, there's one ask that I have from you guys. Please let me know in the comments down below that you enjoy them, because I don't get thousands of views, man. I get like a few hundred views every single video. On my Instagram, I get thousands of views. That boosts my ego sometimes. But on YouTube, I stopped making YouTube videos back in the day, a couple of months ago, because I was not getting enough likes, enough views. It just demotivates you, because you're like, oh man, nobody actually appreciates them. I know you appreciate it. If you do, let me know in the comments. Like the video. It just helps with the channel, man. It just boosts my confidence to even make more videos. You know what I mean? And subscribe to the channel. 90% of you are not subscribed. Subscribe to the channel. And if you want to learn more about this, educational side of things, and watch my screen in the real time, there'll be a link somewhere on this side of the screen. And that's it. Subscribe to the channel. Let me know in the comments if you enjoy this. I'm out of here. Peace. Goodbye.